Been a good while since I've done one of these portfolio updates, so it feels like now is a time to have a look at how the portfolio is performing. I have made some changes, we have been through some rocky waters, and this is what a real person's, normal person's portfolio looks like now. I've been fortunate enough to be able to grow it to over 6 figures inside 5 years, thanks in part to luck, thanks in part to smashing as much in as I possibly could, thanks in part to being consistent, all different sort of reasons. But we're at a point now where I'm really happy with it. It's starting to grow pretty well, despite what we've seen over the last few weeks. So let's have a look through it. Right, there are some positions in there that are red as well, so I have nothing to hide. I'm always completely honest in terms of the investments that I've made within my portfolio. All that I ask that you do is don't blindly copy what I've done. Even the pros get it wrong. I'm not a pro, by the way. I'm not claiming to be a pro. I'm an amateur that puts a majority of my cash into all world funds and S&P 500, but I like to have a play around with individual businesses as well, because I enjoy it. Nothing more than that. I don't expect to try and beat the market. I like the game of trying to do so. But let's get straight into the portfolio then. So obviously, as you can see, I hold my portfolio with Trading 2 and 2. And if you haven't already started, there is a link in my bio where you can use promo code NEIL and you will get a free fractional share as a result of doing so. It's typically worth somewhere between £10 and £100. And it's a great way of getting started. You can sell it out. You can use that cash to reinvest into what you wanted to invest into, or you can keep it if you want to. Right, so I've got 109,472. £1,000, that represents a 42% increase. Now, as you can see, the total return there is 17,559, which obviously isn't 40% of 109,000. So it doesn't, the way that Trading 2 and 2 works it out isn't necessarily massively reflective. I am actually 42% up, but it doesn't take into consideration everything in terms of the gains, the dividends, the cash on hand, the positions I've sold that I've made money on. So it is a little bit confusing. But listen, I'm more than happy with it. Everything we can see is in the stocks ISA. So Trading 2 and 2 like to use cool language. So stocks ISA, stocks and shares ISA is the proper term for it. There, I don't know how they get away with that, to be honest with you. So I have, as you can see, maxed out my deposit for this year. I did that on day one. I was fortunate enough to save up a bit of cash and I deposited it in. I get a lot of questions saying, should I average in or should I deposit in as soon as I possibly can? Well, that really depends on your risk tolerance. But what I can tell you is 63% of the time, you'd have been better off lumping in, because 63% of the time the market goes up, which means that you're buying in and there is a 63% chance that it will increase. Now, that does, of course, mean that there is a 37% chance it will decline, in which case dripping in would have been better. But I lumped in. So if we change to the year view, you can see it there. I lumped in there. And obviously I did it in 2 stages, and it has just since grown since then, despite, again, the drops in the market over the last few weeks. So it's about your risk tolerance. If you want to lump in, there's a 63% chance you'll do well. There's a 37% chance you'd have been better off averaging in. Right, let's have a look at the businesses. As you'll notice, first of all, I have completely removed pies. I don't have pies anymore because I don't like the way that the dividends get reinvested across all of the allocation of positions that you have within there. So I don't have any pies within my main stocks ISA at the moment. They've changed the order now, so it is the biggest position that you have at the top. So the biggest position I have, of course, is the Invesco FTSE All World. I got 42,669 in there, and I'm up just short of 6%. Now that's because less than a year ago, I changed from a Vanguard All World into the Invesco All World. I did that because the fees are much lower, but it looks like I'm only 6% up. Well, I was already 10-15% up in the last one when I sold that, banked the gains and rebought this, so I'm actually up quite a bit more than that. S&P 500, I use VUSA. I did also change this over the course of the last year, which again is why it only shows as 19% up, and again why all the numbers at the top are confusing when you look at them. But the VUSA is a dividend paying distribution ETF, basically pays you a dividend. It does so once a quarter, a due one any week now, I believe. So the biggest position is All World. The second biggest position is the S&P 500. Between the two of them, it represents £75,000, which is the vast majority of my portfolio. From there, I've got a US biotech fund, which is, let's have a look at it, really been hammered, I believe, over the last month or so. Yeah, down 5% over the course of the last month, but still more than happy with that. Realty income has been in the red since the very first day I bought it, which is just the nature of it, I suppose. It is a monthly dividend paying business. It is a REIT, which means it basically means it makes its money from rent on properties, and it issues that out. I think that in order to be a REIT, you have to issue out, I think it's about 90% of your rental income has to go as a dividend. In the red on that, I did miss one there. So Vanguard FTSE Emerging Markets. Now there is a bit of duplication that I have here because Emerging Markets is also incorporated into the Invesco FTSE All World. So I need to have a think about that. I'm 7% up on that. I try to tinker as little as possible. So I try to not to make any decisions at all, really. And I have only made one change in the portfolio over the course of the last year, which we'll come on to in a minute. Legal in general, 2% down. Sometimes I'm a little bit up, sometimes a little bit down. It's a UK darling. It pays a hell of a massive dividend, which is due in the next few weeks as well. And a lot of people are invested into it just for that very reason. Now, I do have a limited exposure into the UK, but I do like a few dividend-paying businesses like Legal in General, like Aviva, and I have them, and I have had them for years, and they've done me all right. You know, the dividends have been really nice. Aviva is up significantly more than Legal in General is, but I will be, unless there's some sort of catastrophic news, I'm going to be holding both of those, as far as I'm concerned, for a very long time. Microsoft up only 32% now. Now, I say up only 32%. That's because it has declined over the course of the last month. We have seen a bit of a pickup in the S&P 500, but as you can see now, it is actually down 9% on the year. Microsoft typically, over the last 15, 20 years, has been averaging between 20 and 30% a year growth, right? So it's just natural that we're going to have a pullback at some point, and it is all to do with the tariffs. Yes, the fact that Nvidia is down affects every single company in the top 10 of the S&P 500 because they all use Nvidia products. The fact that China has developed that AI tool, which is superior and much more cost effective, all of these things have affected the likes of Microsoft. So I'm more than happy with it, and I'll continue to hold it. I do still see growth within that, even though the size of it that it already is. I think this is a bit of a blip. Lloyds Bank up massively on that, 60%. Another UK dividend-paying business pays twice a year. 60% increase is massive. It's at 73p. We look at, I think that's an all-time high. Yeah, it is. That's an absolutely all-time high, which is not something you'd necessarily expect from a UK business. 60% growth is one of the, if not the, yeah, that is the best performing position in my portfolio at the moment. Korean crackers. Right, Unilever up about 12% on that UK business, but has real significant global exposure. There are some concerns in terms of their woke approach, I suppose. I'm not going to get into any of that sort of stuff here. Doesn't bother me. It's just, it'll be chip paper next week. Aviva, as I said, doing really well, 24% up. Nice dividend paying business, insurance company in the UK. Apple, 50% up, again, despite a 15% decline over the last 3 months. 11% over the last 1 month, still 30% up over the year. So fair play. I listened to Damien's podcast the other day, and I heard him talking about the fact that every 5 pence in every single pound that is spent globally goes to Apple. That's a hell of a company. Google, Alphabet, 44% up. That one's had a bit of a dip recently. And as you can see, with all of these positions that have had a dip, you'll notice I've not done anything. We can even have a look in transactions. Where is it? History. I'm going to give something away now, actually. So what you will notice, this is the big news in terms of what I have done is I've sold Rolls-Royce. Okay, I have sold out of Rolls-Royce. I was just under 700% up. I had previously cut it in half. People are, of course, interested to know why I have it, because I've been a big advocate for that business for years. A couple of reasons. I am simply banking a 700% win, right? And it is important to take these wins when you can. Now, it could double from here. I don't think it's as likely. I don't think the growth is as likely going forward. It could double from here, but I don't think it will. Right, so I've decided to get out, take my cash. I've taken that cash and I've put it into the All World Fund. And that really, when you do that, you take winnings from individual businesses that do well and put them into the likes of an All World. Significantly increases over time the rate with which you compound the returns that you're getting. Second reason is I do happen to live in Derby, and I know a lot of people that work for Rolls-Royce. Now, obviously it's not insider trading, they're just telling me common knowledge. But put it this way, I am comfortable to be exiting from that business at the moment. Like I say, it could still continue to grow. SMRs are extremely exciting. The travel industry, the defense side of things, there's a whole load of stuff that is pointing in the direction to say that it'll do absolutely fine. And that is my final point why I have exited. Be greedy when others are scared, and be scared when others are greedy. So people are very greedy for Rolls-Royce stock at the moment, given the returns that we've seen. People are very greedy for European defense stocks at the moment. So I'm being scared. I'm doing the opposite. I'm taking my cash and I'm getting the hell out. Could prove to be a completely wrong decision to make. I'm not bothered. If it goes up another 10 bagger from here, I'm not bothered. Honestly, I've banked that win and I'm more than happy. Now, this is not financial advice. If you still hold it, you do you. Right, let's move on. Johnson & Johnson. Horrific 3% down. I've held it for years. It pays a dividend. Like I said, I really try to make very few decisions. I try not to tinker too much. I've bought into a business. I try to keep it for as long as I can, unless it reaches 700% up, of course. Tesla, 44.57% up. But let's have a look at over the course of the last 3 months, 40% down. I'm still up because I bought it so early. I am concerned about this one. If I can get back anywhere to near where I was before, I need to have a think about an exit point for this business, I think. The leadership concerns me, shall we say. Let's leave it at that. PepsiCo, 13% down, right? So worst performing business in my portfolio. Ignoring the one beneath it, don't look at that one yet. We'll come on to that. PepsiCo is 13% down, right? And I bought into it at the wrong time. I do still believe in it as a dividend-paying business. I do believe it has growth going forward. I'm going to sit in it for the time being. You got to, if you're selling out of everything every time you see a slight drop, especially these massively established dividend-paying global behemoths, you're a trader, and I'm not a trader. I'm a long-term investor. So I'll keep hold of it for the time being. And then the last one, Virgin Galactic. So down, it's unbelievable. 189% down. I haven't sold out of it because I just think it's funny, and it's a reminder. Right, it's a reminder to not make stupid mistakes, to not hedge. Well, it wasn't a stupid mistake. It was a play. It was a bit of fun. I enjoyed doing content on it. I enjoyed the story of the business. The leadership have just been horrific. They've ripped the soul out of the business. It will go to zero, as far as I'm concerned. But I just like to keep an eye on it in there because you never do know in the future what might happen. So 109,410, 42% up, allowance completely used. I'm going to, in the next few days, you might even be watching this in the new financial year, I'm going to be putting some cash in. I won't be maxing it out on day one this time. There has been a change of circumstances in my working life, shall we say. I can't go into anything just yet, but I will do an update on that very soon. You might have noticed I've already put 3 videos out this week. That might be a clue of what's going on. All right, listen, take care. I'll speak to you soon. And don't forget, I got that link to Trading 2 and 2 free fractional share if you want that. Any questions, let me know.